Good afternoon, traders. This is Christian from Hertz Tropic Trade Group, and it is Monday, April 13th. So Monday is in the books. Pretty nice day today, considering the price action. There were some big winners, and it looks like there were some big losers today. So depending on how you traded or how you were positioned, you probably either had a pretty good day. I don't know, maybe an average day or maybe not so good day, depending on again how you were positioned. What I noticed today was, we had a little bit of retracement of last week's price action in the small caps, which were the best performer last week. Small caps were up huge last week, so they fell down this week. Today they were down 2.7% today. But again, keep in mind, a couple months ago, you would look and see, wow, IWM down 2%, 2.7%, and you would look and if you looked at the price action over the last couple of weeks, you realize it's really they're just retracing a small move from last week. So remember to kind of keep those things in perspective. The big outperformance today was in the Qs, right? Up 1% for the day. Really rallied from the open. Was up from the open 1.5%. We'll cover a couple of the names today, but it was definitely seemed like a FANG day, like a momentum name within that group. And then gold, which really doesn't make a lot of, a major combination usually that you see with Nasdaq is gold being up, but gold and gold miners had a pretty big day. So notice I did actually populate some option activity too on the right. Option activity really hasn't been something that we've been seeing. I think a lot of the trades where institutions are jumping in hasn't been in options because the premium is just too expensive. If they have been doing some things in the institutions and options, it's been a lot of like put selling and or put spread selling and call spread buying, that type of thing. But a lot of the flows that we've seen have been in stocks, and again, that's the beauty of kind of what we do. We don't just look at option flow, and as we know, a lot of the options that they don't work, some work. But it's really what we fit into our system that really works well. So let's talk a little bit about the price action besides the GDX, and of course the semiconductors. Tech was also strong. You could see the internet stocks, but really what I was looking for the last couple of days was the breakout in Netflix, and I was getting a little bit frustrated towards the end of last week because I did put on a position and got the breakout today. So the stock was up 7% today. We've got earnings. So I put on two different trades for this, right? And I also have this in. I'll get to the tactical portfolio as well. But if we go to our trades, I put on a call spread, and I put this on a 1 day, right, where I was looking for I think I put this on last Tuesday, where I was looking for a run into earnings. And it kind of fizzled for a few days, and then I took this thing off today. Even though I think Netflix can continue to run, I don't see any reason why. Sometimes what these names like to do before earnings is they like to make they like to make the move before earnings, and then on earnings day it's not that big of a move because everybody's been buying leading up to it. It's one of those names that I've talked about for a while that I do think it does. This is the right environment. I guess you can kind of debate. I'll kind of give you the counterpoint with this is that they're not earning any. The more time that you spend on Netflix, right? They don't have any advertising that they're doing on there. At least I don't think. And it's basically you're only paying for a fee once a month, right? That's the negative of Netflix. But I think the growth the last couple weeks. Or couple months internationally has outweighed that situation with that, and finally, we're looking at a breakout of a 2-year base. Right, this is something again that I retweeted last week. I know a lot of people are talking about it today, but I take pride in being early on these things. So we were in this last week. So I put on the call spread, and then I also put on a stock position, and I almost did get stopped out of the position last week. So this was really. Nice today, especially in a market that was the majority of names were down today. So not only did Netflix take off, but Tesla took off as well. This is a position that I also own. This one's in my IRA. We set this up a few weeks back, where we talked about on the weekly chart that this found some nice support here. So this has been kicking up, very nicely. It's still way off the highs, but you could see that this has now made a move, and this was one of the weekend. This was one of the Tribeca Trade Group weekend watch list names as well. So we do put that out. Here's our watch list names, by the way. This is my momentum watch list, but if you go through and look at the watch list name, whoops, that's not the right. Oh, it's this one. I have it in here under the wrong thing, but it's labeled 329. But this is our watch list for this week. Some names did pretty well. I actually added a few new ones on there, right? So Tesla, Roku, Docu, we added some nice performance. Some of the ones that didn't perform too well, I think are still okay looking. I'll be watching this Teradyne. It did not trigger for the day. Baba was also a name. I think I missed it on the watch list, but we did put out the setup last night in our Slack room. So Baba triggered as well on the 1 hour. Right, so this kind of like today's price action, even though the broader market was down, it made a little bit more sense to me that some these names that there are names that are going to do well, in my opinion, with this lockdown that everybody's facing, right? So Baba did break out. I talked about how this week's value area was pretty thin. And if you move over to the daily chart, so again, only up 1.5% today, but that's okay. I'm looking for a breakout of here out of this little consolidation zone. We talked about Tesla, also Amazon in focus today too. They're announcing that they're hiring more workers. I mean, this is another huge move, right? This thing was fairly quiet for a couple days last week. Apple looks like it's waking up as well. If we go to Apple and we look on the one, now there is resistance in front of it. That's up at right around 280, and you can see there's a few VPOCs up here. There's one here, and I think there's one higher too. But first one is at 275, which is right in front of it. So maybe that gets taken out tomorrow. The small caps I think are also intriguing. I mentioned that they were up huge. I want to say they were up like 25% last week, something like that, right? Without me getting out my spreadsheet with the performance. But interesting, this is kind of sitting back down. You could see that the volume was a little bit lower than it was on Friday. So I would keep an eye on this. I would keep an eye on small caps. I still think they're interesting. I talked about small caps and some of the under-owned sectors in some of the ones that we've been seeing some inflows into in the ETF world in the weekend video that I put together. But so I would, sometimes you don't pick the day perfectly that these things are going to go, crazy. And I do think it makes sense for this to kind of sit back a little bit, after a big week. And that's the whole thing with the overall market too. And if we go to the, usually I start with the S&P, but I think there were so many interesting movers. But if you look at where we are, we're right at this top of value. We were trying to break higher, and I think there was a small MOC imbalance, which, as you know, is, if you've been paying attention to what happens to the market around 350, it's pushing the market around a little bit. But this fared okay. What we want sometimes is actually a little bit of digestion. And I think even, down 70 basis points is not bad right now, considering, how fast this market is, how fast the tape is moving right now. So this isn't bad. And I think if we remain above 27.51.25, we're in good shape for the week, and I think that'll be something to watch. I started to think like, we're really cutting into this value area pretty deeply, because as you know, if we establish ourselves inside value, then it triggers the 80% rule, and you could possibly see a move all the way through to the other side. But I always like to look at the time frames not in isolation but together, because if you look at the 1 hour on the S&P futures, we're still hanging above value here too. So that was one of the things that I wanted to see how we finished by the end of the day. So this looks okay. Like if we digest for a couple days during earnings season, so we do have. I feel like I should mention earnings season. I know I'm kind of with the consensus, but I just don't think it's going to matter that much. Some of these names that are going to report, it's going to be, the numbers. I think everybody is expecting really bad numbers. It's really going to be what they say on their earnings call that could possibly be a catalyst. I do think, like I was looking at J.P. Morgan. They're implying like close to an 8% move. That is way higher than expected. And that could be the case for a lot of names, just because of the unknown. And the market makers might be pricing this wrong a little bit. I think they're putting in a pretty big factor of the unknown, and they're building that into the option price. So it could be a good quarter to sell some premium. Maybe you could do that on the downside and on the upside, and maybe things just don't move that much. But you can see J.P. Morgan normally doesn't move over 3-4%. I guess maybe over 4% or 5%. So they're implying a much bigger move for that for JP Morgan. I did a very small trade. I did sell a little bit of premium in this, but earnings I'll participate in this season, but I'm doing fine. I'm I'm trading very well without adding earnings into the mix. So I think that if you don't need it, if you're trading fine, then don't mess with what you're doing. Or if you want to participate small for earnings, you can do so with some selling some call spreads or selling some put spreads, something to that effect. Or if you're long calls, maybe if you're long stock, you could sell a call against the position. You could definitely do some things like that, but. But overall, I know that earnings is going to be in focus, but I think kind of like secondarily, right? People are going to talk about it all day long as we get into the heart of it, but I really don't think it's going to impact the markets that much because I think a lot is priced in. But we'll see what happens, and if that's the case, we could have finally some chop. Maybe the tape slows down a little bit. The VIX did close basically on the lows of the day, right around the last week's lows, right around 41. So we are pushing, a little bit lower. I think if we break below 40, it's another good sign for the market. Credit spreads. I just wanted to show you this really quick. It was just a thought that I was having. Right, I see over and over people comparing this market to 2008, right, and saying, okay, there was a retest, and they're really like breaking it down very closely. One thing I don't see people doing, and that's why I'm going to do it now, is comparing credit spreads with what they saw in 2008, right? So no doubt we saw a spike in credit spreads, meaning that there's heightened risk in the market, right? But if you're making all these comparisons to 2008 and saying, well, it took this long for this to straighten out, and look at the difference. Let's see if we can even do this max. Here's where the credit spreads were in 2008, 2009. So if you're doing all of this, and I'm not saying, sorry, I'm not coming at anybody particularly. I'm just saying I see an awful lot of analysis comparing what's going on in the market to 2008 and saying, hey, well, we got a retest and so forth. So again, I'm trying to keep as objective as possible because I don't know what's going to happen a week from now. I'm basically just looking for opportunities in single stocks where I see them. I'm watching, support and resistance in the indices and making sure I'm cognizant of that. If we're starting to move back down or if we still have momentum to the upside, right? I still, as I said in the weekend video, I don't really have any sell signals. So that's why I'm not buying any puts right now. And I'm not really going crazy long, on calls either, but I am tilting that way until we see some sell signals. But here's where credit spreads were in 2008. So, if you're basing a lot of your analysis on what's going on now versus what happened in 2008, 2009, I think you want to keep this in mind too. Is that there was a lot more risk present based on this particular chart and what credit was doing. And again, I always believe that the fixed income market, that is where it's a little bit smarter than equities. I know people like to use the term smart money, which I hate. But I do think that the fixed income market there are some good hints and good clues, to pay attention to if you're just predominantly trading equities. There are some things to realize there, and this is one of them. All right, guys. So I'll leave it there. Again, a great day in the room. I wasn't holding much in my trading account. But the trades that I were holding, I also put on that gold trade on not Friday, on Thursday. So, I had some nice things today. And then also what we did in the tactical portfolio. So here's all our trade. I always like to show the trade blotter. I did start some semis, some SMH. We saw some nice January calls. Again, whenever I see an order on the tape, right, and somebody told me, oh well, they may have been selling some calls, some front month calls against that. It's really the chart, and if it lines up in my system. So what did I do here? I started a position and hasn't fully triggered yet, but I do like the semis, for the rest of the year, as I think, um, output will increase as they're talking about more and more about reopening the country, hopefully sooner than later. Wow, it looks like Roku is up here after hours. They mentioned some things. So again, another company that should do well in this environment, right? With everybody at home. Uh, the last thing I was going to just discuss briefly was our tactical portfolio. We did rebalance this last week. That's the trading contest. Where's the TTG portfolio? Here you go. So what we did, I still have some cash in here. I'm kind of waiting for the VIX to come in a little bit more to redeploy the cash balance of this. But you could see Amazon is our biggest position, besides the dividend ETF that we have in there. Qs I added last week as well. So that's how we're shaping up. I took some profits in Costco, which was a nice winner. So I rebalanced that one down a little bit. This should be sorted by percentage, but it doesn't look like it is. But there you go. And a lot of these names did really well today, so happy with that. All right, guys, thanks for watching. Have a great night, and see you tomorrow in the trading room.